Valens Research, Uniform Financial Analytics.
Fox Corp, right? Which is basically Fox News and FS1 and FS2, the sports networks, et cetera. Everything that was left over at Fox after Fox sold most of the business to Disney a few years ago. What we can see here is similar to what we saw for BlackRock. The first thing that jumps out for Fox is as reported metrics totally misrepresent how profitable this business is. It's not an 8% ROA business, it's a 37% ROA business. Also importantly, though, as reported metrics misrepresent how much this company is reinvesting in its business, right? It's not reinvesting at 10+% a year for the last 2 years. It's actually been basically at a 2 or 3% growth if you average in those two businesses. Those 2 years. The most important thing, though, when looking at Fox that as reported metrics get wrong, though, is what the market is expecting the company to do. On an as reported basis, it looks like this company is trading at a 15 times PE, right? Below market average of 24 times right now, but not unreasonable for what a lot of the media space is priced in, considering all of the disruption going on from streaming and unbundling, et cetera. What we can see, though, when we look at the uniform accounting numbers, is that's totally wrong. This company isn't trading at a 15 times multiple. It's trading at a single digits multiple. It's a 9 times uniform PE metric business. It is really cheap, right? It's a totally different understanding of whether or not this company could be mispriced or not. And right, we could say, hey, you know what? There's going to be some decay in the company's business, right? The analysts are forecasting ROA after rising in 2021 to fall off in 2022 to 35%. But right, if we understand, hey, this company, it's going to have some fade, but not a lot of fade, right? Because of the fact that it still has plenty of, strong moats. Fox News is still what Fox News is, right? FS1, et cetera. People still want to watch sports, right? We can all of a sudden say, hey, you know what? If we don't expect that growth, that return to fade quite as much, because we realize the market is pricing a lot of fade at a 9 times multiple, all of a sudden we can say that Fox News actually might be undervalued, right? Fox News might be up 50% upside if you think this scenario is reasonable. You wouldn't even wonder whether or not the market mispriced Fox if you thought that it was trading at levels very similar to peers, because you would say, yeah, you know what, the whole entire industry is hated by the market, whatever. Fox is actually hated a lot more because the market's misunderstanding it. And that's the kind of insights we can see with uniform accounting that can help us spend more time figuring out if this is a good idea or not, because it really looks mispriced, which isn't clear using the as reported metrics.
Valens Research, the world's leading source for uniform financial analytics.